Welcome back. It's time to get a business update with Owen. Hello again, Owen. Starting off with Petroplus announcing that it's gone bankrupt, and that emerged just a short while ago.
Yeah, that's right, Claire. Something of the inevitable about that. Its shares were suspended in Swiss trading on Monday. You might remember this company. It's the largest independent oil supplier in Europe, had its credit lines frozen to the tune of $1 billion just a few weeks ago. So things were looking pretty bleak there. And now we get the news that this company is about to file for bankruptcy. In the UK, creditors force a shutdown of its deliveries in the UK at the beginning of the week. The thinking now is this company may have to sell off refineries here in France, as well as countries like Belgium and Germany, and possibly even the UK, although it does still hope to keep that plant open right now.
Right, we'll get back to the oil situation following that embargo on Iran in a moment. First, though, a look at the markets.
Yeah, we're all opening a little bit flat. The CAC 40 here in Paris perhaps taking the brunt of those early losses. Those are the numbers you can see in London, Frankfurt, and here in the French capital. All the markets down around 0.5%. As I say, the CAC 40 has taken the hit a little bit. That's largely because of two of the key French banks being downgraded by Standard & Poor's, Société Générale and Crédit Agricole, as you would expect. Their stocks have taken a little bit of a hit. BNP Paribas, I've put in there, did escape that downgrade from Standard & Poor's, and as you can see, its losses slightly mitigated. We'll give you the numbers on that downgrade a little bit later. I'll just end with the Asian markets for now. A quiet day's trading. That's because most Asian markets are still closed for the Chinese New Year. Just the Nikkei and Sydney's markets trading. The Nikkei managing to make around 0.25% gain, despite the fact that the Japanese government did a bit of a U-turn on its forecast, originally saying just a few months ago it thought the economy would grow around 0.5% this year. In fact, they now think it will contract by the same amount this year.
So the EU has formalised its strong arming of Iran over its nuclear programme. That pressure is likely to hit some of Europe's most troubled economies hardest. But you think that it will have limited impact globally?
Yeah, because the focus has been right now on this show of force, if you like, by the US and particularly the EU passing that embargo. The problem is right now is that Iran, the EU only imports around 20% of Iran's output, and the lion's share of Iran's output actually goes to customers much nearer home, the likes of China, the likes of Japan, and indeed India. In fact, between those three countries, they make up nearly half of Iran's oil customer base. So you can see that while not a drop in the ocean, the EU embargo really isn't that significant. It's countries like China and India that are actually important players here.
But the EU wants to try and influence these countries to do the same thing.
And yet they admitted yesterday in putting this embargo in place, they couldn't really tell countries like India what to do. And in fact, we had a very vocal endorsement of Iran from the Indians themselves, basically saying they would use the situation to their best advantage to exploit it. That means them getting cheaper oil from Iran and, of course, getting perhaps an unrestricted supply. The other thing with India right now is, as well, they've announced that they're going to trade gold for oil, and that means that they can circumvent any freezing of Iran's central bank assets, so they can basically get around all of that and still keep the trade lines open with Iran.
Now, so far, you've seen a limited impact on oil prices for European suppliers.
Yeah, which suggests that it's been priced into the markets for some time now. Remember, the EU and the US have been making these noises about an embargo for weeks, if not months now. So most investors realise that this was only the end game. And you can see there a limited impact, particularly on their European oil trading. The price of Brent crude, that is the European index, only really edging up by around just over 1%, around the $110 a barrel mark.
Now, if you find the term European Financial Stability Facility a bit of a tongue twister like I just did, take heart. Its successor is the European Stability Mechanism. It's supposed to get up and running this summer. But confusingly, leaders are now talking about running both funds alongside each other. Catherine Gillam takes us through what the ESM is supposed to do.
The European Stability Mechanism, or ESM, is scheduled to start up in July. The €500 billion fund is the permanent solution the EU has come up with to help end the debt crisis.
Regarding
the ESM, on which we agree and we want to implement, we continue our efforts to restore the confidence in the markets.
The ESM is meant to replace the temporary bailout fund, the European Financial Stability Facility, or EFSF. But they also differ in a number of ways. The ESM will be a fully fledged intergovernmental body making its own decisions, whereas the EFSF was set up as a company to avoid difficult negotiations over changing the EU treaty. While the EFSF is backed solely by guarantees provided by Eurozone states, the ESM will have its own capital base of 80 billion euros. And the ESM will only be available for countries that also join a pact toughening budget discipline. The European Stability Mechanism will run side by side with the European Financial Stability Facility until it expires next year. Some argue that during this time, both funds should run at full capacity, giving it a total firepower of around 1 trillion euros.
Increasing the overall size of the ESM, I didn't say doubling it, increasing the size, and identifying a clear and credible timetable for making it operational would help greatly.
But as a main contributor to the fund, Germany disagrees. It wants the two funds combined to total a maximum of 500 billion euros.
Let's take a look at some more of the day's news in brief now. Shares in BlackBerry maker RAM have declined again, despite its two bosses bowing to investor pressure by resigning. Shares briefly surged after Mike Lazaridis and Jim Bastille stepped down from the Canadian firm whose market value has been decimated by competition from Apple. But they closed down nearly 10% below $15. RAM shares are down more than 70% over the last 12 months.
And as we were just saying a little earlier, two of France's biggest banks have been downgraded. Standard & Poor's said it cut Société Générale and Crédit Agricole to A+ as a result of the French government losing its AAA status from S&P. It left BNP on AA- and said it expects all French banks to sustain only moderate rises in credit losses over the course of this year. Now, the floods in Thailand last year put an estimated 500 million people out of work and cost the economy 10 times more than that. Many factories are still not reopened in the wake of that disaster, and with monsoon rains fast approaching, there's concern that vital foreign investment could dry up. Cyril Payen sent us this report from Thailand.
It's time for reconstruction in Thailand. This paradise for foreign manufacturers was badly hit by the recent floods. So far, only 15% of the hundreds of affected companies have reopened. Employees at this Japanese electronics manufacturer toil day and night to restore production. They say that they've had to go it alone.
Government, not yet, but anything else. Nothing else. From government, nothing.
To stay or not to stay? Is Thailand still a secure bet for the billions of yen or dollars invested by multinationals? For this Japanese manager, the decision has already been made.
We're staying for the moment.
Preventing an investment drain in Thailand is an urgent priority, one with a direct impact on hundreds of thousands of jobs.
If I'm before you today, it is so we can rest assured that we will build our future together. We will prove that Thailand is resilient and that it knows how to bounce back.
Top businessmen came to Government House to hear her speech.
I'm quite confident that all the foreign investors will give us the confidence, because normally that this is the whole plan that we clear out to the public, and along the way I think we have also get closer with all the investors to make sure that all the problem has been solved. Yeah, so we feel confident that.
Thailand sustained $45 billion in damage. $25 billion will be needed for the reconstruction alone.
That's all we have time for in the business update. Thanks very much, Owen. That's it from me. All the latest headlines coming up right here on France 24 with Stuart Norval. Don't go away.